Good morning, everyone, and welcome to our second call in the METL COVID-19 Business Assistance webinar series. I am Janine McKenna with the Emporia Area Chamber of Commerce. And for those of you who are not familiar with METL, METL is a regional coalition of the Manhattan, Emporia, Topeka, and Lawrence Chambers of Commerce. METL was formed because of the leadership of these four chambers that we felt that there was a need for a regional voice for business. In the past, Wichita and Kansas City chambers have been the predominant voices in Topeka during the legislative session, but we believe that the four METL chambers represent an important voice in the middle. In addition to the many common interests, the METL Coalition represents nearly 3,000 Kansas businesses. Our motto is stronger together, and together is exactly how we're going to come through this challenging time. To that end, we are pleased to have the chamber leadership and interested members from each METL communities with us today on this webinar. These webinars will be held Tuesdays and Thursdays at 11 a.m. for the foreseeable future. And while we do have a maximum capacity of 500 participants, these webinars are being recorded and will be made available through the METL chambers and other local stakeholder channels. And speaking of other stakeholders, I really want to thank the Explore Lawrence for handling all the technical aspects of this morning's webinars. And with that, let's get on with today's topic. We are very pleased to have Neil Bradley, Executive Vice President and Chief Policy Officer at the U.S. Chamber of Commerce with us today. Neil will give us a CARES, Coronavirus Aid, Relief, and Economic Security Act, what small businesses need to know, an overview, and answer some of the most frequently asked questions. And time should be allowed at the end for questions and answers, and you can do that by clicking just on the bottom bar. You will see a Q&A and or a chat bubble. Just put your questions there, and I will moderate those when the time comes. And Neil, in an interest of time, I'm not going to go into a detailed introduction this morning, but I just want to say that we are very pleased and honored with how responsive you and your team have been to be with us today. So thank you for making yourself available this morning, and I will turn the presentation over to you.
Well, thank you, Janine. It's a pleasure to be with everyone today and discuss the CARES Act and some of the things that we can do to support businesses and families at this time. And I'm just going to pull up a presentation here that we can use. Well, hold on. Let's get this one up. Da-da-da. One second here. Yeah, here we are. All right. So as Janine said, my name is Neil Bradley. I'm the Executive Vice President and Chief Policy Officer at the Chamber. I'm going to walk through some of the major provisions of the CARES Act that was enacted into law last Friday. We can discuss some of the implementation issues, and then also some of the resources that are generally available. So let's start with a major overview of the bill. This is a $2 trillion package. Though once you account for leveraging through the Federal Reserve, there's support for another $4 trillion for the economy. So $2 trillion in direct expenditures for businesses, families, states, and localities. And then in addition, another $4 trillion in financial support through the Federal Reserve and the banking system. You often hear this referred to as the Phase 3 bill because this is the third in a series of bills passed by Congress in response to the coronavirus. One of the big things important to individuals is automatic direct payments to taxpayers, $1,200 per individual, $2,400 for a joint return, plus 500 per child. If you filed your 2019 returns, this will be based on your 2019 return. If you haven't, it'll be based on your 2018 return. It phases out at incomes above 75,000 or 150,000 for a couple. These funds will be direct deposited or sent to you by the IRS, and they're hoping to have those direct deposits done within the next 2.5 weeks. You all saw the numbers this morning. Sadly, a record number of applications, over 6 million applications for unemployment insurance. This bill makes a number of changes with respect to eligibility and benefits under unemployment insurance. Perhaps most importantly is that it waives most of the normal restrictions on eligibility. So independent contractors, sole proprietors are now eligible for unemployment insurance. If you've already exhausted unemployment insurance and you can't return to work or can't work because of the coronavirus, then you can get extended benefits under this federal package. In addition, there's another $600 per week on top of your regular state benefits through July 31st. We get a lot of questions about whether once you qualify for unemployment, that runs until that end of July deadline. Once you can return to work, so if you have an employer who is shut down because of the coronavirus, who's laid you off, and they offer that position back, then your eligibility for unemployment insurance ends because you can, in fact, return to work. Today, we want to spend the bulk of our time focusing on the provisions that impact employers. And we've divided this into 3 groups: provisions that impact all employers, those that are targeted to larger employers, and then those that are targeted to small businesses, the self-employed, independent contractors, and nonprofits. So let's start with all employers. Perhaps one of the most overlooked aspects of the bill is the ability for employers to defer the payment of their employer payroll taxes between now and the end of the year. So as you all know, when you pay your employee, you have to then write a check to Uncle Sam for both the employee and the employer portion of payroll taxes. Under this provision, you can defer paying the employer portion of payroll taxes. That's that 6.2%. For the rest of this year, and then 50% of that amount deferred will be due at the end of 2021, the remainder due at the end of 2022. Importantly, and you'll hear me talk about this throughout the presentation, there's some interactions between some of these benefits. If you end up as a small business taking a loan under the Paycheck Protection Program and have that loan forgiven, you can no longer avail yourself of this payroll tax deferral provision. There are also a number of tax changes, net operating losses for businesses that are experiencing losses. The ability to carry that back against prior tax payments is extended for up to 5 years. Some of the limitations are suspended. If you're a corporation that has AMT credits, you can accelerate the recovery of those. If you have a business interest and you've hit the limit on interest deductibility, that you can elect to have that expanded from 30% to 50%. And if you're in the restaurant business or the retail space, you may have run in the past 2 years a quirk in the 2017 tax law. Frankly, it's not a quirk, it was a mistake, that meant that you couldn't take advantage of writing off quickly the improvements you made to your properties. That's been fixed here. All of these provisions are really designed to improve liquidity. In a period in which businesses don't have revenue, these provisions help you improve your cash flow and improve your liquidity. Also available to all employers is an employee retention credit. And so this is also fairly new. It wasn't in the initial drafts of the bill. It showed up in the text right before Senate passage. And it's for employers who are fully or partially shut down as a result of a governmental order. That includes the orders that we've seen for shelter in place or closing businesses that are deemed non-essential, or if you've had a 50% drop in gross receipts in a quarter compared to the year prior. If you meet one of those 2 qualifications, you can receive a refundable tax credit for 50% of the wages up to $10,000. In other words, a $5,000 tax credit to the extent that you continue to pay your employees. There's a differentiation between businesses with more than 100 employees and those with less. If you have more than 100 employees, it only counts to the extent that you are paying wages to an employee who can't provide their normal services. So they're maybe at home, they can't do their normal work, but you continue to pay them, you can qualify for the tax credit. If you have 100 or fewer employees, all the employees that you pay, whether they're providing services or not, are eligible for the tax credit. Importantly, if you take advantage of this, you cannot receive a Paycheck protection loan, or if you take the loan, you can't take a benefit of this. I'll go quickly to mid-size and larger employers. Here, and this is probably the aspect of the bill that's furthest away from implementation. The CARES Act provided $500 billion for loans, loan guarantees, and support for Federal Reserve credit facilities. What in the world are those? If you are a follower of some of the market movements and the Federal Reserve, you may have heard things like a commercial paper facility or a money market index facility. These are things that the Federal Reserve creates to improve liquidity in the market when you have an incident like this. The other thing that they can do is they can create a facility that supports lending through the private banking system to others. And so we actually anticipate that most of the $454 billion that's available under this $500 billion will be used to support credit facilities to make it easier for banks and other institutions to make loans to mid-size and larger businesses. There are also special programs for the airline industry and critical national security businesses, but this comes with restrictions, restrictions on stock buybacks and executive compensation. We don't have a lot of details on this program yet. We expect to learn more in the next couple of days, early next week, about how this program will be established and run. Now let's turn to small businesses, the self-employed, independent contractors, and nonprofits. Perhaps the marquee program, the program that is the most generous, is something called the Paycheck Protection Program. It's $349 billion in loans for small businesses, generally less than 500 employees, but if you're in one of the categories that qualifies as SBA compliant and you have more employees than that because you have some of the exceptions, you can also qualify for this. 501c3s that have fewer than 500 employees, the self-employed, sole proprietors, and independent contractors. Those latter, sole proprietors, independent contractors, generally aren't eligible for SBA loans, but you're eligible for this program. How much can you borrow? You can borrow up to 2.5 months of your average payroll, not to exceed $10 million. Think about payroll this way. The wages that you pay your employees, the benefits that you pay, most notably healthcare as an employer, those factor into your payroll costs, and you take the average of that and multiply it by 2.5. This is not a program that's run through the SBA. This program will be done through local and national lenders. If you have a lender that's already 7A qualified, and they provide SBA 7A loans, they're qualified for this. In addition, the Treasury Department has announced that they intend to make all FDIC insured institutions and insured credit unions eligible to participate in this program. And it'll be up to the lender whether they decide to do so or not. And I know many lenders are currently trying to work through the requirements, because while it'll be your local lender who might be administering the program, they have to follow rules that come from the Treasury Department. And at the moment, there's a lot of concern about how some of those rules will work. As a borrower, there are very minimal requirements. No collateral, no personal guarantee is required. It's a simple 2-page application at the moment. Loans can convert to grants. This is really important. I know a lot of small businesses are worried about borrowing money and the debt overhang. In this instance, you have the opportunity to convert your loan into a grant. And the size of that grant, so the amount of loan forgiveness, is based off the amount that you as an employer spend on payroll, rent, interest, mortgage interest, and utilities for the 8 weeks after you originate the loan. So you go out and you take a loan, and as a small business, you're going to look at the 8 weeks after that, figure out how much you're spending on those items, and that's your maximum amount of potential loan forgiveness. Importantly, that amount can be reduced proportionally if you've reduced the number of FTEs on your payroll. It can also be reduced if you've reduced employee wages by more than 25%. So one of the things you'll want to think about is you're maintaining your employee headcount and wages in order to qualify for loan forgiveness. We know lots of employers have already had to let people go or reduce wages. There is the opportunity to bring them back, and if you bring them back, you generally won't be penalized with respect to your loan forgiveness. At the U.S. Chamber, we've maintained a guide for this, uschamber.com/SB loans. This was updated yesterday to reflect the new guidance out of Treasury and includes things like the current interest rate terms, the term of the loan, and items like that, as well as some of the information you'll need if you decide to go apply for one of these loans. There's also, for the same group, something called SBA Economic Injury Disaster Loans. I happen to be from Oklahoma. We're quite familiar with tornadoes and the devastation they cause. I know you all are also familiar with natural disasters. If you're a small business who's applied for an SBA disaster loan before, that's this program. It's expanded, so independent contractors and sole proprietors can now qualify, but the terms, at least in terms of the loan, are very similar. $2 million in working capital loan, 30-year term. The payments are automatically deferred for a year, and they've loosened the underwriting to make it easier for folks to get to these loans based on credit scores rather than tax returns, up to $200,000 without a personal guarantee, no collateral if it's under $25,000. A new aspect to this is a $10,000 emergency grant. If you go to sba.gov, which is where you apply for one of these loans, you can also request, as part of your loan application, a $10,000 emergency grant that SBA should provide you with within 3 days. Importantly, that grant does not have to be repaid. It doesn't even have to be repaid if ultimately you're denied the loan. This is a source of quick confusion. However, if you get that $10,000 and you get the Paycheck Protection Loan, they're going to take that off your loan forgiveness on the Paycheck Protection Program. Finally, let me talk about two other quick things that aren't in the CARES Act, but were from the Phase 2 bill, and these actually took effect yesterday. If you have fewer than 500 employees, you are now required to provide 10 days of paid sick leave if the leave is related to the COVID-19 outbreak. So it's when your employee is ill, or they've been quarantined due to the exposure, or they have to take care of a sick family member or a child whose daycare or school has closed, and they are not eligible and they're not available to telework. So they're not available to work, they're not available to telework for one of these reasons, they're out of work. You're required to provide them with paid sick leave at their regular rate of pay, up to $511 per day. If they're caring for a family member, it's only up to $200 per day, 2/3 of their rate of pay. Here's the kicker though. We're used to mandates from Washington that are unfunded. This one happens to be a mandate that is funded. And so your costs up to the maximum for paying your employees will be fully reimbursed by the federal government. There is a limited option for businesses with fewer than 50 employees to get exempt from the leave requirements, but only with respect to the requirement of an employee caring for a child, and only if it threatens the viability of the business. A similar program for paid family leave. This is for folks who are familiar with the FMLA, up to 12 weeks of unpaid leave. This provides for up to 10 weeks of paid leave, but only to the extent that the employee is not working and cannot telework because they need to take care of a child due to that school or daycare closure. Paid at 2/3 rate of pay, maximum of $200. Again, fully reimbursed by the federal government. And again, if you have fewer than 50 employees, the same process for an exemption. So I know that was a lot to cover. Let me just tell you that We have a lot of these resources, including guides to the Paycheck Protection Program, the EIDL program, the Employee Retention Tax Credit, and coming within a couple hours, the paid leave programs with guides on all of those at uschamber.com. And in addition, we have resources for small business at uschamber.com/co, including survival guides, tips for small businesses as you navigate this difficult period. So with that, let me stop there, and we'd love to turn it back to Janine, and we'll take your questions.
Great, thank you very much, Neil. We do have several questions here, and I will just remind everybody that there is a button, and I see the questions coming in at the bottom of your screen that says Q&A, and you can submit those questions there. A few questions we had in advance of today was, what documents do we need to have ready in order to apply for tomorrow? And how many loans are available? And I'm sure that's dependent upon what type of business they are.
So let's take the latter first. So you're only eligible for one Paycheck Protection Program loan. So for each business, it's only one loan. It only covers for if you're an employer, small business. It only covers the payroll for your direct employees, not independent contractors. Independent contractors can apply on their own. Beginning tomorrow, the small businesses and sole proprietorships can apply. The self-employed and independent contractors can begin applying on April 10th. Documentation that you'll need to fill out the loan application form. I would stay up to date at treasury.gov or the U.S. Chamber's website. That loan form could change over the course of today as they're getting feedback about implementation issues. But in general, one of the most important things you're going to need is some form of documentation about your payroll expenses to figure out how you calculated your average monthly payroll costs. This could take, was it IRS Form 941, where you document your payroll costs. It could be that. We're also currently working, in fact, we have a call with Treasury and the SBA here in just about an hour or so to talk about making sure that other documentation can also be accepted. For example, if you use a payroll organization to process your payroll, making sure you're eligible to use the documentation from that organization to substantiate your payroll. So if the advice I give to folks is, if you're preparing today, figure out what payroll documentation you have for 2019 that you can use for that purpose, and stay tuned to figure out exactly what forms they're going to be looking for beginning tomorrow.
Great, thank you. The next question is about the CARES loan. It states that it excludes payrolls of over 100,000. Is that per year or per pay period?
So that's per year. And so if you have an employee that is making $75,000 a year, your payroll costs are that annualized $75,000 per month. So you take the monthly times 2.5. So you think about, you're covering the proportion of that $75,000 over a 2.5 month period. If you have an employee that's making $150,000, the first $100,000 counts. And again, it's that pro rata monthly cost for that $100,000 times 2.5, and you exclude the additional $50,000. So we've had some concerns from folks who says you can't count any of the payroll for anyone who makes more than $100,000. That's not true. You just can't count the portion that's attributable to more than $100,000 on an annualized basis towards your payroll cost.
Wonderful. Can you answer the question about subcontractors being covered, or are they supposed to file on their own?
They're supposed to file on their own, and admittedly, there's a lot of confusion out there about this. And you'll see some guides put out by other organizations that suggest that you can count the money that you pay independent contractors towards your payroll costs as an employer. And admittedly, the way the law was drafted, there's some confusion around it. But if you look at the Treasury guidance that came out yesterday, it's very, or excuse me, 2 days ago, it's very clear that that you cannot include that as an employer, and the independent contractor applies on their own. And the reason for that is if you didn't, you would count the same dollar twice. It would be counted once by the employer and then potentially counted again by the independent contractor applying on their own.
Great. SBA and CARES loan. Can you explain if employees are, if they're furloughed, is that considered not keeping them on continuous payroll, or is it considered maintaining staff and payroll and the loan possibly forgiven?
So you want to think about there are kind of two elements towards that loan forgiveness. The first is you have to, as the employer who took the loan, you have to account for your spending in the 8 weeks following the origination of the loan to account for the dollar amount that you're eligible for loan forgiveness. And so the biggest chunk for most employers will be their payroll costs over that 8-week period. If you take out the loan and you have no payroll costs for those 8 weeks, then you're going to have very minimal ability to have loan forgiveness because it would really only be your rent and your utilities. So the first thing is you got to realize you got to be paying payroll for the 8 weeks after origination. The second is looking at the number of employees that you have. And so again, you're paying your employees and we're doing a head count test, and you're going to want to make sure that you've maintained your number of employees versus before February 15th or in the reference point to the same period in the year prior, because that's what they're looking for in terms of what you did with the loan. And if you don't do that, you'll lose proportionately some of your maximum loan forgiveness. I know that's a little confusing, but I think the one way to think about this is think about Congress's intention here. Congress's intention was, we're going to provide you a loan. We're going to convert that loan into a grant if you take that money and you use it to keep paying your employees for the next 2 months. So anything that deviates from that lessens your loan reduction. That's Congress's intent. They want to provide you money, but they want to make sure you're using it to pay your employees. And that's the way that you get loan forgiveness.
So the next question is, would you recommend that I keep my employees on payroll rather than have them go on to unemployment? If I can have the loan convert to a grant, then I'm using federal stimulus dollars to pay them, right?
That is the intention. I'm reluctant to give anyone individual advice because you'll want to think through the financial situation of the business, the other costs that you might have. But the program is designed to encourage you to do that and to provide some financial support for you to be able to do that. That is the goal.
Okay, the 10 days of paid leave due to COVID-19, how will the business be fully reimbursed?
So it's a refundable tax credit against the payroll taxes that you pay as an employer. And so there are kind of 3 mechanisms to this. First, as a refundable credit, you just get credit back. 2, they've made clear that you have, as an option, the ability not to send in your payroll taxes in anticipation of receiving the credit. And then 3, Treasury is currently working on the ability to request an advance on your tax credit. So we understand that some small businesses, you're going to have liquidity problems. It's difficult to access the money. What they're trying to do is create a system in which you can ask for that money now rather than, for example, waiting to the end of the calendar quarter, and you can get that money now. Their goal is to be able to reimburse employers within 2 weeks for the paid sick and family leave costs.
Great. Are there any benefits for landlords that do not have any employees?
So if you don't have any employees, other than, as a sole proprietorship or something like that, no, there's no way to qualify for the Paycheck Protection Program loan. You may be eligible under an EIDL loan, and you should check that out. But the Paycheck Protection is really designed for the self-employed, independent contractors, and small businesses with employees.
The next question is, what if you own two small businesses? Is each business eligible?
Yeah, you're going to want to make sure they have separate EINs, and they're truly separate businesses. That will matter. There are, in general, some affiliation rules with respect to ownership. If you download the application for the PPP, you'll note that it requires sign off and attestation by every owner that has more than 20%. So you're gonna want to, as a general matter, yes, but you're going to want to check and make sure you don't run afoul of any affiliation rules.
Right. Does the guide that you mentioned on the uschamber.com include all the eligible expenses in the monthly average cost for the PPP?
It does. Yes, it walks through what counts as payroll costs.
Wonderful. And I might add, for those in the Emporia area, and I'm assuming on the other METL communities, we do have that link to that guide on our website. The next question is I have one employee that is high risk due to past health issues. They are now quarantining themselves and is greatly concerned about getting the virus. I have filled out a form to put them on unemployment this week, as she cannot work from home and did not want to get fully paid for not working. Will this jeopardize my ability to participate in the Paycheck Protection Program?
So as a general matter, it's something you'll have to work through. So first, in terms of applying for the loan, you're going to be looking backwards. If you were in business in 2019 or before, you're going to look at your payroll costs in 2019. And so it doesn't matter that the employee is now currently not employed. If you receive the Paycheck Protection loan and you are planning to try to get that loan forgiven, then you're obviously going to have to incur some payroll costs in the 8 weeks after origination, and you're going to want to make sure that you maintain your employee headcount. So in that situation, you're going to want to be bringing the employee back on payroll.
Great. The next question is, are state taxes included in the amount as an expense for the application of the PPP?
So yes, and forgive me, I don't know the specificity of some of the state and local taxes there, but if you are required to pay some payroll tax to a state or local government as part of that compensation, then yes, your federal withholding taxes, your federal payroll taxes do not count, even the employer portion, towards the cost of employment, towards your payroll costs.
Great. I'm seeing some people are repeating questions on the chat as well as the Q&A. We have a lot of questions here, so just be patient with us and we'll try to get to them all. The next question is, what do employees need to do when they take the 10-day full program? And then what do they need to do for FMLA extended program forms with the program itself? What do businesses need to do to comply? Does the employer, this is a long one, need to pass out any educational materials to employees to help them understand what direction they need to take, such as unemployment for the 10-day full pay, 8-week, 2/3 pay?
Yeah, so The best resource is the Federal Department of Labor, which has a 49 question Q&A on this to walk through individual circumstances. As a couple things that come up a lot. What if my business is closed? And so we're shuttered. Do I still have to provide leave? The answer to that is no. If a employee can telework, and just refuses to not telework, can they qualify for leave? No, this is kind of a balance between the employee and the employer. It's designed to provide some support for individuals who are truly sick or have to take care of a dependent child and can't work and can't telework. In recognition of that, particularly with the latter, remember, an employee is only entitled to up to 2/3 of their regular rate of pay. And that includes both the 10 days of sick leave if they're caring for a child, or the additional 10 weeks of paid leave.
Wonderful. We have heard that the paycheck protection can be used for payroll, benefits, rent, and utilities. But it seems that when figuring the amount of the PPP loan, we only look at the average wages from 2019 plus benefits, i.e. health insurance times 2.5. When do we get to figure in or include rent and utilities?
So you're exactly right. So the expenses that you use to calculate your loan amount, your maximum loan amount, are different than the expenses that you use to calculate your loan forgiveness. And it's also a different period of time. And so it is your payroll costs, which importantly do include healthcare, for 2.5 months. But your forgiveness is based on 8 weeks of expenditures. So, a half a month less, 2.5 weeks less, I guess, given how months run. But you get to add on to that rent, utilities, and interest on mortgage debt. I should flag here, by the way, the statute says that it's 100% of those rent and utility expenses. The guidance put out by the Treasury Department day before yesterday said 25%. And so because they're anticipating such high take up, they were going ahead and limiting that. That's an issue we've raised with Treasury and the Small Business Administration, and we hope to get that worked out in favor of what the actual law says.
Great. The next question is, will the average payroll be figured on a calendar year 2019 or April 2019 to March 2020 period?
It's calendar year 2019. With a couple of exceptions. If you're in a seasonal employer, you have some options of choosing a 12-week window, or if you weren't in business for most of 2019, you can look at just January and February of 2020.
Great. The next question is on forgiveness. The 8-week period doesn't seem to be widely agreed upon. The bill says covered period is the 8 weeks after origination, but some portions of that same forgiveness language refers to the period being February 15th. I have seen some opinions that borrowers can use any 8-week period from February the 15th to June 30th. Can you confirm what the 8-week period will be for the forgiveness components of payroll, rent, interest, and utilities?
I just leaned down because I'm pulling up the bill. And you're right, and part of the confusion is generated by the fact that they use covered period in 2 different sections to mean 2 different things. And so leave it to Congress to figure out a way to make this even more complicated. And I'm just pulling this up here. We'll confirm and send this to you, but it is the 8 weeks after origination. I was just looking for the page number here, and I was hoping I could give you the page number to reference, but we'll get you the page number so you can reference that.
All right, we'll gather that information and make sure that gets out to everyone. The next question is, do you have any information on when the SBA will roll out the registration program that banks can input to the application information into what will be used to obtain an SBA loan number to determine if the customer loan application was accepted into the money pool approval?
This is the biggest issue in terms of getting this program up and running tomorrow. And so we, along with our friends in the banking community, are working really hard to encourage Treasury and the SBA to simplify this process. All the banks we talk to, they want to be helpful, they want to go. They are just simply looking for guidance that is clear and easy to implement from the federal government. And at the moment, we have a fair amount of confusion, and we have some fairly complicated processes, which we don't believe that the computers are set up to process that your questioner just referenced. So our goal, knock on wood, is that this is resolved at some point today. But as of right now, it's not resolved. And until Treasury and SBA get this figured out, it's going to slow down the banks and the credit unions doing what they want to do, which is be able to help their customers. So I hope this happens today. If it doesn't, this is going to be an aspect that where the federal government is holding up the ability to get this money to small businesses.
Thank you. In regards to unemployment with contractors and sole proprietors applying, is that through your state's local labor department, and is it the same form as normal unemployment?
So it varies from state to state, and so it is all through your state unemployment office. I've been on several of these with different states who are giving different timelines in terms of their implementation of that and what's required. So I would refer you to your state unemployment office because they have responsibility here for implementation.
Great. Could you explain how exactly the $600 extra unemployment dollars work?
So the federal government is offering to pay an additional $600 on top of the normal unemployment insurance that you're entitled to based on your state's calculation. Your state does have to agree to accept the money from the federal government. And so while we anticipate most states will do that, there is a process for your state government to agree with the Federal Department of Labor that you want to implement that provision.
The next question is, which loan format do you believe is best suited for the hospitality businesses, the EIDL or the CARES?
Well, again, I think that depends on your individual circumstances. You know, if you look at the terms on their face, the great benefit of the PPP, or I think what the question referred to as the CARES loan, is the ability to have it forgiven. Of course, the ability to have it forgiven is dependent upon meeting those expenses post-origination and employee headcount. If you don't do that, based on the terms released by Treasury 2 days ago, it's a 2-year loan term at a 0.5% interest rate. Obviously, with respect to EIDL loans, in addition to the $10,000 grant, you can have a much longer term for the loan, but a higher interest rate.
Great. What qualifies an individual under the paid leave entitlement of caring for an individual subject to the federal, state, or local quarantine or isolation orders related to COVID-19?
Yeah, again, once you get into those details, I would refer you to the Q&A at the Department of Labor's website. But in general, their intention was if you're having to care for a sick family member and you can't work or telework, that you would qualify for this benefit. understand that because you're caring for someone rather than the employee is sick themselves, it's a reduced rate of pay under the paid sick leave.
Okay. I think you answered this, but we'll ask again, can an independent contractor apply for EIDL loan and unemployment?
And the idle loan and unemployment. Independent contractors are newly eligible for the idle loans. Independent contractors are newly eligible for unemployment. In general, the things that you're restricted against is collecting money for the same thing twice. And so you'd want to check that. If the question had been a paycheck protection loan and unemployment, obviously you're taking the paycheck protection loan to pay yourself. And so you can't both pay yourself and claim unemployment. So in that instance, you've definitely run into a conflict. With respect to the idle loan, you could be borrowing it for other purposes rather than paying yourself. And so because it's a loan that has to be paid back, you may have more options there. Just remember, the general rule of thumb is you can't take money for the same purpose from two different sources.
Great. If an employee and employer share in the healthcare premium, which amount is used to figure the average? The total of the two or just the employer share?
The employer share.
Okay. Will the PPP loan be forgiven for new employees' payroll cost or just if used or just for current employees?
So they're generally not looking to say, is it Neil who is still on the payroll, right? What they're generally looking for is with respect to the head count, is Neil, you paid 3 people last year. Are you continuing to pay 3 people? And if you paid 3 people an average of 75,000, have you cut that by more than 25%? So this is not so much a checking on, is Neil Bradley still there, but it's more of a checking on, have you reduced your employment levels?
Great. Question regarding FTE. If a business has, say, 8 full-time equivalents in 2019, and that is what's used to figure out the PPP loan amount, and in 2020, prior to February 1st, your FTE dropped to a lower amount, which figure do you use?
I'm looking at my guide. Prior to February 1st.
Correct. If a business had 8 in 2019, and that's what's used to figure it out, but in 2020 prior, okay.
The February 1st doesn't really help you. There are 2 options. Your option 1 is your average number of FTEs per month from February 15th, 2019 to June 30th, 2019. Your second option is the number of FTEs per month from January 1 of this year to February 29th of this year. And so, I guess in the 2 months you could have an averaging issue, but you don't get to look back and just say, just give me the January 1 to February 1 number. The 2 options are either the first 2 months of this year or your average number over the period February 15th of last year to June 30th of last year.
And can you also explain the calculation for FTE?
So FTEs are generally calculated for purposes of this as inclusive of all employees. So part-time and full-time.
Great. Next question is, what expenses are forgivable within the idle loan? Operating expenses, debt, what else possibly?
So the idle loan doesn't have provisions for forgiveness. The idle loan only has a $10,000 grant option. So it's the Paycheck Protection Loan where certain expenses can be dollar for dollar forgiven off your loan.
Okay, there was some confusion. Can a company who only utilizes a 1099 contractors apply for the PPP to cover that labor? Okay, I'm not hearing Neil. I don't know if others can hear me or not. Oh, he looks like he's going to come back on. So I know we still have a lot of questions. We'll get to those, see if he can come back on here, and we'll get right back to those questions. We have just about 10 minutes left, and we will do our best to get to all of those, and hope he'll get back on here pretty quickly. While we're waiting for him, I just want to thank everybody for being on here today. We are getting excellent questions, and you can just see the expertise that Neil has and are so appreciative of him being here. Please remember that we will have these webinars every Tuesday and Thursday at 11 a.m. and more specifics will follow on the upcoming webinar this coming Tuesday. I appreciate the comments coming in. I do believe that somebody said the best information they've received anywhere, and I think we all agree with you. We'll wait a few more minutes and see if Neil rejoins us. And if not, we'll make sure that we try to capture all of these questions and see if we can have him answer those and put out a Q&A answer sheet. We just really appreciate him giving us his time today to be here. Oh, and the slides will go out with the recording as well, so you will have those available as well. We hope to get those out later today, but it will possibly be tomorrow in getting those slides out to you. Yes, there will be future registrations for the upcoming webinars. So each webinar that we do host, there will be a separate registration for that. So be watching each of the METL communities as we put those out and have you register for each of those. If you do have suggestions for topics or speakers, I would suggest that you reach out to your local chamber to give us your ideas and suggestions. As we said, we're going to continue these into the future, into the unforeseeable future for that. I know that we're losing some people off of this. We still have a few more minutes and hope that Neil will return. We are still waiting to receive some of the answers from Secretary Toland's webinar. That was this past Tuesday. However, if you were unable to join us this past Tuesday for Secretary Toland's webinar, that is up on YouTube. Each of our chambers should have gotten that information out to you, but if you did not receive that, please let us know and we can forward that information out to you. And as soon as we get those unanswered questions from him, we will forward that out to you as well.
Janine, it's Hugh. Can you hear me?
Yes.
I thought it may be worth noting Tuesday, we're waiting on the confirmed speaker, but it will be the Small Business Administration. And we know that that seems to be the most pressing questions other than the CARES package. So that's one folks will definitely want to be on as well, Tuesday at 11.
Thank you very much, Hugh.